Hello everyone. Today we are going to give our presentation on our designated topic, that is adoption of international and accounting standards in Australia after adoption of IFRS. We are a group member of 6 and we are going to give our presentation respectively on our designated topic. So I'm Malina Ranjit, student number RRG 2016, and I'm beginning from the introduction part. Financial reporting is one of the most indispensable activities from the viewpoint of an organization, especially publicly listed companies. The implied financial reporting standards give a thorough idea to a company regarding the treatment of different aspects. Therefore, an entity has to be extra vigilant and cautious to manage their effectiveness through poised financial reporting standards. Appropriate financial reporting has a tendency to treat different financial aspects related to a company and present the same in front of the major stakeholders. Most of the companies throughout the world have now shifted to international financial reporting standards in order to bring attentiveness and effectiveness in the company and their reporting. Among numerous entities across the globe, Australian corporations have changed the mechanism and dynamics completely to international financial reporting standards from Australian Accounting Standard Board. This particular transformation from AASB to IFRS have brought numerous changes and repercussions on the efficiency of the company, as this particular activity seems quite efficient and viable for the long efficiency. The main aim of this presentation is related to the same transformation from AASB to IFRS. It is required to theoretically examine the transformation and then apply the same transformation on a specific company operating in Australia. Based on the same transformation, the point here is to identify the potential benefits pertaining to the same transformation. The company which has been used in the same aspect is Woolworths Limited. Now my friend will continue further with the presentation. Thank you.
Thanks, Malina. I am Asha Shrestha and my student ID is PVS2046, and I'm going to talk about the analysis and discussion of the Woolworths Limited. Woolworths Group is a major Australian company with extensive interest in retail throughout the market of Australia and New Zealand. Woolworths Limited has been termed as the second largest company in Australia as far as revenue generational capability is concerned. It is a public listed company whose shares are actively floated in the markets of Australian Stock Exchange. Retailing sectors is one of the highest and largest potential industries in Australia, and Woolworths Limited is one of the most integral and valuable companies which is operating in the same regime. Since its inspections in the year 1924, the company has been generating values for the stakeholders. In the year 2016, the company generated net revenue amounted to $59 billion with their more than 0.2 million employees. Now my friend will continue further.
Thank you, Asa. My name is Sital Pant Karel and my student ID is PVS2066. I will continue with the transformation from AASB to IFRS. From the analysis, it is found that the transformation from AASB to IFRS is fully rationalized because of the numerous issues and problems which is highlighted specifically during the time of economic crisis. It is more than essential to highlight the differences between both of the accounting standards, but before highlighting the differences, it is natural to highlight things which are common in both of the reporting standards. The main criteria of the financial reporting in both AASB and IFRS is identical and same. It means that both of these accounting standards are in the mindset to present factual and the valuable information in front of the shareholder. This particular information is likely to be given to them so that they can take timely actions and decisions regarding the investment in the company. Shareholders are more connected and concerned with the financial performance and positioning of the companies as the factor is fully efficient and valuable for the long-term efficiency and productivity. On the other hand, the retention of the shareholder is equally conducive for the companies as a proper retention of the shareholder is associated with the long-run mechanism and efficiency of a company. According to Jones and Finley 2011, shareholders are prone to retain their position with the companies whose accounting standards are giving them more leniency toward the shareholder, as long-run effectiveness and deliverance for more than essential for the sake of an organization, and the same is applicable in the context of Woolworths Limited. Now my friend will continue further. Thank you.
Thank you, Shital. My name is Manisha Shrestha. My ID is EMB21961. Apparently, there are two different aspects which have been influenced heavily in the transformation of AASB to IFRS, which are treated of assets and liabilities of the company. IFRS 1 is specifically dealing with the presentation of financial information in a form of different accepts that needed to be analyzed critically by the shareholders and the management of the company to take timely actions and decisions, which is equally imperative for them to take timely actions and decisions. Theoretically, operational asset is a thing that is used specifically for the purpose of generating operational benefits for the company. The higher of the value of the operational assets, the higher would be the probability in getting higher attentiveness in the market. The same criteria is applicable with Woolworths Limited, which is well-directed and efficient company. The company is looking forward to execute their operational assets effectively so that materials resulted and outcomes could be succumbed by them. Things is liability. Lower liability is an indemnity that the financial performance and positioning of the company is powerful as they have lower amount of obligations associated with them. The lower the value of the liability of the company, the higher would be the probability in getting higher attentiveness in the market. The same criteria is applicable with Woolworths Limited as well. The company is looking forward to maintain lower amount of liabilities through which they can easily gaining higher attentiveness in the given marketplace. Now my friend will continue the further.
Thank you, Manisha. My name is Janak Dahal. My student ID is EMB21903. I'm going to talk about the benefits and drawbacks due to the transformation from ASB to IFRS. From the management discussion and analysis, it is clearly found that the financial and strategic positioning of Woolworths Limited get better and better with the implication of IFRS and transform their positioning from ASB to the same. The presentation aspect of Woolworths Limited gets better with the transformation to IFRS from ASB, which is equally efficient for them as far as attracting their shareholders is concerned. The first benefit, which is highlighted in the context of Woolworths Limited, is about their increasing operational assets. Total assets of the company were nearly 15,200 Australian dollar million before the transformation to IFRS from the ASB and managed to increase by more than 300% after the transformation take place, which is an efficient sign for the company. It means that the operational assets would be an ideal choice for the shareholders. The particular aspect reserves the tendency to mesmerize the position of the company and maintain their vision as well. The operational assets of the company moved to the level of 22,916 million Australian dollar in the year 2008, in which the transformation took place. Moreover, the criteria of managing the performance and operational capability of the company has also increased positively due to the transformation from ASB to IFRS. Apart from the total assets, the property, plant and equipment as well as the net assets have increased heavily, as well as after the transformation, IFRS made it mandatory for Woolworths Limited to maintain their inventories and decrease the factors of wear and tear tendency. They emphasize on the use of first in first out FIFO method, which is quite essential and well determined in the long run. This tactic is helping the company to reduce the wear and tear and maintain inventory of the company professionally, which is equally efficient in the long run. Thank you. My friend will continue further.
Thank you, Janak. My name is Fading. My student ID is AVL2001. I'm going to further explain the benefits for the Woolworths due to the transformation from AASB to FIRS. It is shown in the annual report of Woolworths Limited that the total liability of the Woolworths Limited has increased, also due to the transformation, but it fully rationalized its increment. The liability of the company were $12,950 million before the transformation, but moved to a level of $14,720 million after the transformation. But the long-term debt of the company has managed to decrease in the same selective financial period. Long-term debt of the company, which were $4,277 million before the transformation, decreased to a level of $3,868 million after transformation, which is again a positive aspect from the viewpoint of Woolworths Limited management in terms of increasing its operational cost, which has a direct and positive influence on the positivity of the company. In conclusion, the main purpose of our presentation is relating to the same transformation from AASB to FIRS for Woolworths Limited. From this entire analysis, it is clarified that the positioning and the performance of the selected company gets better and better with the transformation to FIRS from the AASB, and the company is advised to use the same tactics from their efficiency and the betterment in the long run. Thank you.